Welcome to Trading Lounge and the SP 500 for the 16th of June. And starting with the daily chart here, we're on track for our ABC correction here for wave 2. So as you know, we're looking at 5 waves up. Here's an impulse wave for wave 1, then an A wave, a B wave, and a C wave for wave 2, and then heading higher at that point. Now, our trade that we're looking for is really this low here. Now, of course, we may be able to get a position in here, and we'll do our best to do that. But this one here is our trade. Now, to confirm this move up through here, what we want to see is the A wave is normally quite sharp. We want to see the C wave here on more of an angle. Because if wave A here and wave C are the same, then it could be a bearish turn from that point. So anyway, let's go in and we'll just stay with our ABCs at the moment. So going into the 4-hour chart here. I think it was interesting on the daily chart. I mean, out of all the indicators, I kind of like the stochastics the best, if you can get it timed right as well. When indicators flatline like this one here, all that simply means is that you're making a new high above the previous high. So the indicator becomes invalidated, and you need to go to the next higher degree of structure time frame to make it of any use at that point. Okay, that's its only sort of weakness, but it's all the subtleties within indicators that make them valuable, I believe. But anyway, that's that. Let's just go back to the 4-hour chart and start to work in from that particular point here. So we can see the stochastics moving up quite sharply in line. Well, it's actually moving much faster, because when you think about it, it's taken all this time to get down here, and it has flatlined here, but on the daily chart, to touch the bottom. And here it's moved up quite quickly in terms of the trend. So from the top to the bottom here, this has moved up quite high to that trend, hasn't it, here? But yet here, it hasn't moved up that far at all. Anyway, apart from that, we're looking for 5 waves down for wave A here, and then we're looking for an A and a B and a C wave to come into play here for wave B above the 3,100. So we need to go in and understand this. We'll also have a look at the Nasdaq as well, and see how it's traveling as well. And we may be only able to get from wave B here down to wave C here. And obviously there's good support here at the 2,800, which is a minor trading level. So I won't go into that now, but that's where the support is. So we may not reach this level down here, but we need to track the wave structure. Normally there's a relationship between wave A distance and wave C distance as well. So that would also bring us down to the 2,800 as well. Right, at first glance, it appears that we've got 5 waves down here. So we need to look at 3 waves to take us back to the 61.8% retracement level, or this 3,100 area here where we've seen consolidation before over this side over here. So let's move into the 1-hour chart. So at first glance, this would be the way to track it down as 1 and 2, as we've been doing here, 1 and 2 and 3 and 4 and 5 here. For the 3rd wave, the 4th wave here, and then down for the 5th wave here. And now we're getting we're getting at our bounce up here. So wave B can be very simple, or it can be very complex. But because we're going from wave 1 here all the way an ABC down for wave 2, we normally find the A wave, the B wave, and the C wave all pretty simple, sharp, and swift. So that's all occurring at the moment. And yeah, so we need to take a closer look at this, and also want to bring in the Nasdaq today as well for this. So this is one way of looking at it. I just want to check here before I go here, just one little thing that was bugging me here. Oh no, that's okay. So the wave 4's come in at the 38.2, so that's cool. Where the Nasdaq had it quite high here, it actually pulled back much higher than that. So we'll go to the 15-minute chart. So yeah, looking at it like this now, obviously this here is a little bit messy. So this is where we can count this. We could count this differently down through here. There's not like a nice 5-wave structure down through here. So different folks will have different counts for that, and that's okay to a point. It still gives us our low here. But it may get a little bit trickier than that, and that's why I wanted to bring in the Nasdaq for that. But I'll go to the tick chart at the moment. So this move up through here, it could be counted as an A and a B and a C up to here, or it could be counted differently than that. It could be counted having 5 waves up here, then a B wave here, roughly pulling back down to the 50-60%. So 5 waves up to here, that will move up here further, and then we'll have an A and a B and a C wave to here, and then we could have 5 waves up here for this, and then we could pull down from that. So that's one of the tricky things here. I can count this as being impulsive to the upside here. So there's different ways of actually looking at this, and we need to look at the Nasdaq and then come back and look at this and recap this and so on. So a little bit to chat about, not so easy squeezy today. Let's bring in some more data here. So this is our journey downwards so far, and I think that it's good to go over it. So from the top here, we had 1 and 2 here, and then 1 and 2 here for this. And then we counted a little bit tricky in here, but we counted 1 and 2 to here. Let's bring that a little bit closer there. And then down for 1 and 2 here for the green one. And then just working through this here as 1 and 2 and 1 and 2 and 3 and 4 and 5. The detail's important. 3, 4 and 5 here for the third wave, the fourth wave here. And I pulled all my little light blue aqua ones out of there, but basically 1 and 2 here, and it's definitely 5 waves in here. Wave 4, and then we're looking at 5 waves in here. I made a little mistake in here. I thought we had one more little move down here, but anyway, that's resolved itself. Not the end of the world, but you can always expect to bounce off large numbers, you know, that's the thing. So we looked at this here. This can be counted nicely as an A wave, a B wave, and 1, 2, 3, 4, 5 for the C wave here. And this is where it counts a little bit differently here. So it's quite difficult to get 5 waves down here. Yes, you could count it as an ending triangle. That's cool. You could do that. But you could also count it as an A wave, a B wave, and a C wave here. So an A wave here, an A, B, C for the B wave here, and a C wave here for wave 4. And then 1 and 2 in here, 3 and 4 and 5 down here for the 5th wave. So it could be counted like that as well. And then in this case here, I'll just finish this off. And in this case here, we're looking at wave 1 here, 2 here, 1 and 2, and 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave, fifth wave for the third wave, wave 4 as an A wave, B wave, and C wave, and then 5 waves moving up here. So this move up here can be counted as 5 waves. So we need to be mindful of that. And if that's the case, then I can't draw on this side. Then we could be looking here at, I'm just shooting the breeze here, so we'll recap all of this. So we'll come up with some sort of plan. Oops, daisy. There we go. Oh, good. There we go. So we could end up with this situation here with an ABC coming back into this space here, and then having a bounce off that and moving back up. So I need to put it out there, and then we can just rule it off a little bit later. So that, you know, if we do get 5 waves up here, which looks like the case, then we'll get this here, and then we'll get this move back up through here as well. So an A wave, a B wave, and a C wave moving up here. It may go up, this is the 61.8%, it may go up to the 78.6, the next Fibonacci number up here. So yeah, a little bit tricky there. What I want to do now is I want to have a look at the Nasdaq. So it's also on the tick chart as well, so it's all squashy, but this brings up a slightly different count here, because from here I've counted all the little structures down as 1 and 2 here, and 1 and 2 and 3 and 4 and 5. Don't have a problem with that. Wave 3, wave 4 here, and then I've counted 1, 2, 3, 4, 5. So then I've counted 5 waves. So I can get 5 waves down to this point here, right, for this market. So then that leaves me with this A wave here. So this one here, because this one here, if I took the first wave here, this wave 2 here, and just to say that I've made a mistake in this count coming down here, but I put this here, that leaves us back up at the, over the 50% mark for this rally here as a wave 4. That's possible, right? So, and that's okay. We could have wave 4 there, not a drama. But don't forget, we've already got 5 waves in this structure. So that would leave this here as an A wave here, then an A, and a B, and a C here for the B wave, and then down for the C wave for wave B here, and then giving us 5 waves back up into this box here. Now, when we get these sorts of things, we look at from this top here, roughly, to the wave A here. That's where we take this from if we're looking for wave B here. So I take this over here, and that leaves us the 60-60% retracement level here. So this could just be, this would be wave 3 and wave 4 here, and coming up for wave 5. So in this case here, this market could just come up to this space up to here, the 9.9 area, and then just fail from that point and come down for wave C in that instance. So if that is the case, the other thing I need to say here as well, if the 10,000 becomes the support here, then we need to be long from that point. That's when the count will be invalidated, and that means that it's over, and we'll need to look at this here as an A wave, a B wave, and a C wave ending here. But we don't have to worry about that, but we just point out that if this becomes the support up here, then we need to be long from that point, because the correction is finished from that space. And to get a support here, then we'd be looking for the classic trading levels pattern like this here, and we look to go long over here. That's how we do it. That's how I do it. Everybody's got their own little thing, and that's fine. I'm just here to do my thing. But we need that tested support on that level before we can go long, because if it's going to fail, this is where it's going to fail from, and it will want to reach that number. If it will or not, I don't know, but markets love big numbers, as finishing lines. So look, anyway, this particular count here as wave A, B, and C here is also valid, and that throws the S&P sort of into a bit of chaos. But what we could be up against here, if I go back to, I thought it was the hourly chart or 15-minute chart, it may bring in this count here coming up here. If the Nasdaq is going to finish, if the Nasdaq is going to finish here and then move down from that point, then would need to look at this as an A and a B and a C wave to this particular point here. They're probably the same in one way or another, and this will be our sell zone here. Now, in terms of selling here at these points, what we also need to do as well is we need to be a little bit cautious. So we know that we're looking for another little move up in here, and then we should see either wave B move back here. We're either going to be going 3 waves down to here, and then back up there, or we're going up here and we're coming back, we're going down for the C wave at this point. So it's kind of important to look for a short trade setup in this space here. So in that case, then we'll go, whoops, I'll go back to the, not this chart, but we'll go back to the 15-minute chart here. So what we want to see here is we want to see from the low here, we want to see 1 and 2 and 3 and 4 and 5 finish up here. Okay, so that's where that will finish in there somewhere. It just needs to make a high above here somewhere. So go to the tick chart, try to work yourself 5 waves to the upside here. And then what we need to do is you need to wait for 5 waves to the downside here. And then there'll be 3 waves to the upside here. And then you can short under here. Because you got 5 here, that means that you're going to get another 5 over here. So that's going to get you down here somewhere. And then you have to wait for that point. And then after those 5, there will be a rally back up. It could be a 1 and 2, whatever. And then you can go short again here. But you'll need to leave your stop out of the way. So this will be where your first stop goes here. I'm not saying that it's easy. I'm just saying that if you want to do it right. Because the other point here too, you know, is that when you're working through a series of 1s and 2s and 1s and 2s to the downside, you have to understand that the market could pull back, you know, the 61.8% or even more than that. So it makes it, you know, to feed positions into the market and accommodate that, you know, well, let's say 60%, but it's not going to be that, is it? It's going to be more like an 80% pullback. So it means that you need to trade less at that particular point there as well. I also too just want to talk about you know, it's hindsight, but talking about trading this back up here. I mean, I wasn't there at the time, and you know, maybe I need to start thinking about how to help with the S&P a little bit more in terms. It's a little bit tricky from Australia, but you know, I noticed for myself, it was certainly early sort of evening kind of thing, late afternoon, early evening sort of thing. So I managed to get in here earlier, you know, but the thing is that the trading levels can be really helpful if you're not sure about the wave count. Right, so I just want to go over that a little bit. So you know that we've got this pattern here. This is what I call the classic trading levels pattern. And it's really helpful because you don't need to know Elliott, you just need to know the pattern. And this is in any time frame, any price point that you're working with. And it's simply the market moving in a particular direction. In this case, it's moving to the upside, and it'll be the same for the downside as well. There's not many patterns that can occur at the level. That's the good thing. There's only probably about 3 things, and of course there's 2 others where it can touch here and never come back, and also not touch here and just continue all the way up through there. But normally it'll be one of these 3 patterns I'm going to show you here. So in this case, we've got the arrival, the reaction, the first high above the level, an ABC correction. But this first high here, that's what you're looking for. That's your reference point. You never really go in on that on your first trade. You end up getting a second trade down here, or even a better position down here. But these other ones over here, they also can trigger in trades for you as you're building to the upside here. But the idea generally is that you've got resistance here, and then the market needs to migrate to being support over here, and then you can move up. So that particular pattern here, if I can just close that off now, let's just go to the let's just go to this level here. Now in this case here, we didn't really have the market stop here. So this is an overshoot pattern. So this pattern would be a little bit more like this pattern here. So it doesn't stop at the level here. It just goes straight through and creates the high here, and then has its ABC correction, and then moves along this way. So you can take this high here, you can take this high here, and you should be able to get another high in here. So that really gives you 3 positions to get into on this side on the level here. And not that, just as a rule of thumb as well, the distance above here that it goes is normally the distance below it goes, just as a rule of thumb, just to give you sort of an idea of that. And what's actually occurring is this level here becomes the balance line through here. So in this particular case here, did it react here or did it go straight through? You know, the distance above is kind of the distance below here. You've got these tops here. You probably could have used any of these, I guess, but even if you made a mistake, then you definitely got this one here, haven't you? You know, so that's where you need to be long from. And the stop needs to go under the level, tuck it under here somewhere, and then just sort of hold on, you know. So that this could be done over here, for example. So the market's come up here, it's reacted here, and it's created this high above the level and dropped back down and then gone up through here again. You may have gone long here, but you still would have had to stop under this level, because we're talking about group 2 here now. Normally that's in red here, orange, just to have a splash of color. That didn't come out very well there, but anyway, not to matter. But you see how it sat there? So that brings in the other pattern, the third pattern here, so where it just sits here. So you've got the arrival, the reaction, the first high above the level, and then it just sits here. So then you've got that high and that high to move into. You may even get another one here. But it's just trying to recognize support and resistance without understanding the wave count. Now you can also add volume into this as well. I mean, I'm using a CFD platform, so I wouldn't trust the volume on it. I mean, there are volume indicators like in Forex, you've got volume in Forex, but that's not real volume, but it works okay like real volume. It's just really how many times the price has changed. That's what that volume is on FX and so on, unless you're using futures contracts. So yeah, perhaps we'll have a webinar on all this stuff, on how to read volume properly, how to use the levels properly, those sorts of things. If yeah, I'll give that some consideration. Maybe not a webinar, but maybe some just lessons or something. I don't know. I'll sort something out a bit time poor, but anyway, that's just really what I wanted to talk to you about. Anyway, alrighty, I'm going to call it quits for that. So thanks for tuning in. Cheers.